Yes, students. Now we will revise chapter 8, which talks about assessment procedure, which is also known as returns. In this, one important section in this chapter is, guys, section 139 subsection 1, which talks about who should file the returns and when. First, we will understand who. Let us find the answer for the question who. Then we will go and find the question. Sorry, we will find the solution for the question when. Once we understand who is supposed to file the return, then when we will understand later. Yes, sir. Chalo. Compulsory filing of return as per section 139 subsection 1. Guys, this section has been referred in many places, especially with respect to the due date. Due date given under section 139 subsection 1, which I had already mentioned while covering PGPP. Let us learn again. Now, who all should file the returns mandatorily? Companies and firms should always file the returns, guys. Whether they have income or loss or doesn't matter. They have to file the returns. Then, persons other than a company or a firm, if total income during the previous year exceeds basic exemption limit, that is whether 2 lakh 50 or 3 lakh or 5 lakh, whatever is applicable for them, they should file the return. Guys, please be careful. If my total income exceeds basic exemption limit, even though I am eligible for a rebate, assume my total income is 4 lakh, 5 lakh, or even under default regime 6 lakh, 6 lakh 50, I am eligible for rebate. Should I file the return? Yes, I should file the returns mandatorily. Next, ordinary resident. If such person at any time during the previous year, at any time, guys, hold as a beneficial owner or otherwise any asset, including financial asset located or financial interest located outside India, or as a signing authority in any account located outside India, or is a beneficiary of any asset including any financial interest located outside India. So beneficial owner as well as beneficiary both are covered? Yes. Guys, assume I own some assets outside India, or I have invested in the shares of some foreign company. Am I covered here? Yes. Sir, I held it for only 1 month, sir, 2 months. I purchased the share, sold it in next month. Am I covered here? Yes. At any time during the previous year, they are told. Now you cannot take a protection telling, sir, by 31st March I have sold it, sir. In assessment year, I am not holding it, sir. It doesn't matter. At any time during the previous year, observe the word at any time. Yes, sir. And what is the beneficiary, sir? Maybe I am not the direct owner. I am the nominee for someone else's asset or for someone else's insurance policy. I might be a nominee. In that case, what am I? Beneficiary. Should I file the returns mandatorily? Yes, irrespective of my income. Next, there they have made some provisions. Every person being an individual HUF or EOP or BOI or AJP. Guys, fourth point you check only if you are not covered in the first 3 points. If you are already covered in 1, 2 or even 3, leave it there only. You file the return, that's all. Only if you are not covered in the first 3, go and check fourth. Or if not fourth, check fifth, like that. Okay. Slab rate SSC in simple, whose total income or the total income of any other person in respect of which he is assessable under this act without giving effect to the provisions of chapter 6A, full chapter 6A deduction from ATC to ATU, or section 5454B ECF, that is the capital gains exemptions, exceeds the basic essential limit. Means, guys, simple. Assume you have already claimed chapter 6A deduction. I'm just giving an example. So your gross total income was 5 lakh. Now you have claimed chapter 6A deduction. Chapter 6A deduction, assume 4 lakh. What is your total income? 1 lakh. Is it more than basic essential limit? No. So that means you would have not covered here. Now what they are asking in the fourth point is, for 1 lakh, you add back the chapter 6A deductions. How much you will get? 5 lakh. Is it more than basic essential limit? Yes. You should file the returns. You should file the returns. Means, should I pay tax on 5 lakh? No, 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 no. You need not pay tax as your total income is 1 lakh. Just to check whether you should file the returns or not, you just add back either chapter 6A deduction if you have claimed, or 54 series exemption. Not all 54 series, only 54, 54B, EC and F. Clear? Yes, sir. D and all is not covered. Please be careful. Okay, sir. Let us move forward. Now, sir, I am not covered in any of the first 4 points. Then what, sir? Check fifth one. Check fifth one. Just some. Any person other than the company or firm. Why? Because company or firm mandatory always, irrespective of their income, is required to file the return of income during the previous year if such person. has deposited an amount more than 1 crore in one or more current account maintained with banking company or cooperative bank. More than 1 crore into current account. Current account, whatever amount you are not having, whatever amount you might be having is not directly your income. But still, here they are not caring about your income. If you have deposited more than 1 crore into your current account, then you should file the returns mandatorily. Sir, I have two current accounts, sir. I have deposited 60 lakh, 60 lakh. Have I crossed the limit? Yes, aggregate more than 1 crore. More than 1 crore, guys. Yes, sir. Next, has incurred a foreign travel expenditure of more than 2 lakh for himself and his family members. Okay, if you have money to spend 2 lakh for travel, foreign travel means something is there in you. Something is there in you, but you are not disclosing it. Let us try to find out. Next, has incurred the electricity expenditure, that is electricity bill, more than 1 lakh. Sir, 1 lakh is per annum or per month? Per annum. But you will pay bill per month. Take the aggregate. In a year, how much you have paid, you check. In a year, how much you have paid, you check, guys. Okay. Then in addition to, is this the end list? No. In addition to this, they have also added a rule. They have also added the rule. Now you will check rule only if a person is not covered in any of these 5 points, guys. Then we will check the rule. Sir, if I am already covered in any of these 5 points, is there a need for me to check rule? No. Why? You are already mandatorily supposed to file the returns. Okay, so rule 12AB has been inserted to prescribe the following other condition for furnishing return under section 139 subsection 1. A person carrying on the business, if total sales turnover or gross receipts is more than 60 lakh from that business during the relevant previous year, which is our relevant previous year, guys, 24, 24. Next, a person carrying on the profession, if the gross receipts from profession is more than 10 lakh during the previous year. Okay, sir. Please be careful. They are not telling income, sales or gross receipts. Okay. Then, a resident individual aged 60 years or more at any time during the relevant previous year, and the aggregate TDS as well as TCS collected or deducted on their income is more than or equal to 50,000. Then any other person, the aggregate TDS and TCS is more than or equal to 25,000. Are they supposed to file the returns mandatorily? Yes. Here any other person means who? Other than resident individual. Or resident individual aged less than 60. Aged less than 60. They will fall in this category. They have made 50 divided by 2. 50 divided by 2. Half of it. Which is 25,000, guys. Then a person having savings bank account and the deposit in one or more savings bank account of a person is more than or equal to 50 lakh during the previous year. Guys, please be careful. What was covered here was current account. What I am talking now is about savings bank account. Two different things. There it is 1 crore and here it is 50 lakh. Now assume, sir, I have 3 savings account. I have deposited in each of this account during the previous year 20, 20, 20 lakh. Total deposit is 60 lakh. Have I crossed 50? Yes, in aggregate. Should I file the returns mandatorily? Yes. Now, we understood who should file the returns mandatorily. Now assume, guys, one more thing. Sir, I have not covered any of this. You guys are not covered in any of the points. Can I still file my returns? Yes, you can file voluntarily. But if you are covered above, either under section 139 subsection 1 or in the rule, it is mandatory for you. It is mandatory for you. Okay, sir. When should I file my returns? Tell me, sir. If I am engaged in international transaction, I am supposed to file transfer pricing report as per section 92E. 92E. Then the due date to file income tax returns for me is 30th November. Or if I am a company, any company, irrespective of the income, then a person other than a company whose books of accounts is subject to tax audit under section 44AB, or a working partner whose books of accounts is subject to audit as per 44AB, for them the due date is 31st October. One connection is there for section 44AB, guys. Whenever they are subject to tax audit, they should file their tax audit report also 1 month prior to the due date. What is the due date to file returns? 31st October. 1 month prior to that is on or before 30th September. Where is this provision given? Under section 44AB itself. Whom should you appoint to do the audit? Chartered accountant. And there they have mentioned that specified date. The copy of audit report has to be filed within a specified date. Specified date means 1 month prior to the due date of filing returns. When audit is applicable, what is the due date to file returns? 31st October. And for company guys, whether audit is applicable or not, always due date is 31st October. Okay. And I had also told when I was doing PGBP, if at all, if you have to refer to the due date and if question is silent, please refer to as 31st October. 31st October, that is for PGBP head purpose. Then in any other case, guys, 31st July. Next, return of loss, section 139, subsection 3. Sir, I have a loss. Can I file my returns? Yes, if you want to carry forward, you have to file the returns. Exception is house property and unobserved depreciation. So if you want to carry forward the loss, you have to file the returns under section 139, subsection 3. If not, go with the subsection 3. Remember. Yes. Sir, loss returns, what is the due date? Same due dates. Whether it is income returns or loss returns, due dates are same, guys. Whatever we just now covered. Okay, so next, belated return. Section 139, subsection 4. Now, your friend birthday was there, very close friend, but now one time ali full kuchiko. Okay, in college school, sir, I cannot live without her, without him, sir. We both are full kuchiko, sir, dostu anta. But now you got busy with CA, Papa. You tend to miss few things. So you missed his her birthday to wish. Next day you saw social media. He has celebrated with new friends. You remembered. Now called and told, Macha, belated happy birthday. Okay, he also know that now you are busy and he or she accepted it. Fine. Belated birthday wishes. Same way, sir, can I file my returns belated after the due date? Yes, they are giving the opportunity. They are giving the opportunity. But obviously for belated, late fee and interest would be there. Even if there is a delay in payment of tax, interest would be there. For delay in filing the returns, late fee would be there. Belated return under section 139, subsection 4. A return which has not been furnished within the time allowed under section 139, subsection 1 may be furnished at any time before 3 months prior to the end of relevant assessment year. Guys, when will our assessment year end? Our assessment year will end. First of all, which is our assessment year? 25, 26. When will it end? 31st March 26. 3 months before it. 31st December 25. Okay, na. Yes, they have not given the date. They have told 3 months prior to the end of relevant assessment year, where I can derive the date. What is the date? 31st December of assessment year. Okay. Or completion of assessment, whichever is earlier. If question is silent about completion of assessment, you can straight away take 31st December of assessment year, guys. Next, sir, I have already filed my returns. There is some mistakes, sir. There is some errors, sir. There is some omissions, sir. Can I correct it, sir? Yes, through revised return. Through revised return under section 139, subsection 5. Sir, what is the due date to file revised return? Same like belated. Same like belated. That is 3 months prior to the end of relevant assessment year or the completion of assessment, whichever is earlier. Sir, now I have filed the return within the due date. Can I revise it? Yes. Sir, I have filed my return itself belated. Can I revise that also? Yes. But within that time. Within that time. For example, assume I have filed my belated return on 1st December. Can I revise it within 31st December? Yes, you can do it. You can do it. Sir, how many times can I maximum revise it? Any number of time. Take chance, no problem. Next, they have introduced something recently called updated return. Updated return. The concept of updated return is like this, guys. I have already filed my return within the due date, or belated return, or whatever return I have filed, I have revised it, or else I am not at all to file the returns. Now, can I update the returns? Yes, I can update it. But government is allowing you to update your return only if it brings revenue to them. Only if it brings revenue to them, guys. Okay. Actually, one place it will not make sense for me is that they have told that even if you have not filed any return, you can update it. What will I update? I have not filed anything. What should I update? To update something, I should have filed something. Na? Correct. Now, simply, you have a mobile, smartphone. Now, sometimes few apps will ask for an update. You already have that app in your mobile. You are updating it. Now assume in your mobile you are not at all installed the app. Will you update it? No, straight away download. Correct. So that is like that. So it is not making sense for me, but it's okay. We have to accept whatever government is telling. We cannot question the government until unless we are in the power. Chalo. Any person may furnish an updated return of his income or the income of any other person in respect of which is assessable for the previous year at any time within 24 months from the end of relevant assessment year. Whether or not as furnished the return under section 139(1). See, they are telling whether or not you have filed the returns. Means even if I have not filed the returns, can I update? Yes, they are telling. Or belated return or revised return for the assessment year. Guys, come on. Within 24 months. Within 24 months. Okay, let us understand. So, sir, for my previous year, tell me, sir. For previous year 24-25, which is the assessment year, guys? 25-26. When will this end? 31st March 26. They are telling 2 years from here. That is plus 2 years. You have time till when? 2 years. You have time till when? 31st March 28. Till year, you have an option to file updated return, guys. Updated return. But will I have time from here only, sir? No. When you have an opportunity to file belated or revised, use that. You have an opportunity to file revised return or belated return till when, guys? 31st December 25. Yeah. So if you need, better go with belated return or revised return till year. Only after that go with updated return, guys. So don't go with updated return from the beginning. Obviously, why? Because if I am filing updated return, I am also liable to pay some additional tax in the form of penalty. Clear? So first check, sir, is the room for belated return or revised return still open? If yes, go with that. If already doors is closed for it, then only go for updated return. So in simple, guys, the gate for or the door for updated return will be opened from in simple 1st January 26 to 31st March 28 for our previous year or assessment year. Hope you guys got it. Yes. Now, I told you, government will allow you to file updated return only if it brings more revenue to them. Guys, listen here. You already filed original return or belated return or revised return. Let us assume. You already disclosed a tax liability of 5 lakh in that. Now you want to file updated return. You want to file updated return and disclose your tax liability as 3 lakh. Will they allow you to file updated return? No. That will cause loss of revenue to the government. They will not allow you. Next, sir, my tax liability I had disclosed 5 lakhs, sir. Now I will disclose 7 lakhs, sir. Will government allow me? Yes, my child, coming. File and update. File the updated return. And please be careful, I have to pay 2 lakh. Plus, I should pay additional tax also. 2 lakh is there, interest is there, maybe late fee also will be there. And even additional tax in the form of penalty will be there. Okay, sir. Next, let me change. Guys, assume I had claimed a refund of 5 lakh here. Now throw updated return. I am increasing it to 8 lakh. Will they allow me to file updated return? No, because it will cause loss of revenue to the government. Next, refund. Keep it inside the bag. Put it in the bag. Close the good. Chal. Refund. Next, assume refund. I had already claimed 5 lakh. Now I am reducing it to only 4 lakh through updated return. Will the government allow me to file updated return? Yes, they will allow. Next, loss. Let us take loss. Sir, in my original return or belated return or revised return, I had claimed a loss of, assume, 10 lakh. Now I am reducing it to 8 lakh. Will they allow me to file updated return? Yes. Next, in the original return, I had claimed a loss of 10 lakh. Now I want to increase it to 13 lakh. Will they allow me to file updated return? No. Simple logic you keep it. If it brings more revenue to the government, they allow you to file updated return. Due to updated return, if government is losing something, they will tell, no. You cannot file updated return. Okay, sure. The provisions of updated return would not apply if the updated return of such person for that assessment year is a loss return as the effect of decreasing the total tax liability or results in the refund or increases the refund due. No updated return can be furnished by any person for the relevant assessment year where already one updated return is filed. For example, sir, for this assessment year, I have already filed one updated return, sir. In that also mistake, sir. Can I file one more updated return for the same year? No, no. Sir, within the time, sir, no problem. Still, you cannot file. One updated return for 1 year. One updated return for 1 year. Second case is, guys, if any case is pending against me or proceedings is pending against me, then can I go ahead and file updated return? No. Till the final judgment is done, I cannot file updated return for the year for which proceedings are still pending. Okay. This can be asked for theory, guys. Please be careful. Means in which are the cases the assessee cannot file updated return. Theory expected question. Next, defective return. Sir, I have filed the returns in which the assessing officer has identified some defect. And one more thing, guys, for updated return, there is an additional tax to be paid and all. So in regular class, I would have discussed in detail. You guys also just have a look into that, which you would have already learned. Just have a look into that. Oh, defective return. Sir, I have already filed my returns. Now there was some defect in that assessing officer has identified it. He will send you a notice. Once he send a notice to you, you have to reply to that notice within 15 days. If you don't reply within 15 days or if you don't revise your returns, then it is as if you are not at all filed the returns. It is as if you are not at all filed the returns. So the consequences will be as if you are not filed the returns, guys. Next, self-assessment tax as per section 140A. Guys, simple. If I pay any tax in the assessment year before filing my returns, that tax is called self-assessment tax. Self-assessment tax. Yes. Why, sir? Because see, I would have paid already directly or indirectly TDS, TCS, advance tax and all. Even after all that, if I am liable to pay anything, still some difference. That is called SAT. Self-assessment tax. Self-assessment tax means tax paid by the assessee on the basis of self-assessment before filing of return of income. The total tax payable is calculated on the total income of the assessee after considering the following amount. Means we have to reduce all this. The amount of tax already paid, TDS, TCS, any relief under section 89, then any tax credit claim to be set off in accordance with the provisions of section 115 JD, that is AMT credit. All this you will reduce. Even after reducing all this, if you are still liable to pay something, you have to pay it as self-assessment tax before filing your income tax returns. In case if there is a delay in furnishing the return of income, self-assessment tax shall also include interest for delay under section 234A and in delay late fee under section 234F, guys. Such determined value of tax along with interest is paid before furnishing the return and the proof of the payment of such tax has to be attached. Has to be attached with what? Return. Such amount paid before furnishing the return is known as self-assessment tax. Where the amount is paid by the assessee falls short, the amount so paid shall be first adjusted towards what? Fee payable and then interest, and the balance, if any, shall be adjusted towards tax. Guys, assume I was supposed to pay a tax, income tax, okay, 10 lakh, interest of 3 lakh and late fee of 5,000. So totally 13 lakh 5,000 I was supposed to pay. Sir, I have paid only 12 lakh now. What amount will be adjusted? Means this will be adjusted in what order? First against late fee, next against interest. So 3 lakh 5,000 done. Remaining fully will be adjusted against the tax. So still something is outstanding. What is it? Tax amount. Tax amount. So the order of adjustment is first late fee, next interest, third is tax. Third is tax. And if you delay the payment of short, interest will continue again. Interest will continue on that short amount. Yes, sir. Now, guys, in advance tax topic, we already see if there is a short payment or non-payment of advance tax. In total, whatever the shortage is there, interest would be levied under section 234B. Yes. And in the installment, if there is any shortage, interest would be levied under section 234C. Yes. For the first three installment, three months, last installment, 1 month at 1% per month. Yes, sir. Now, sir, what if there is a delay in payment of self-assessment tax? Will they charge interest? Yes, sir. And see, obviously, when there is a delay in payment of tax, there will be delay in filing the returns also. So here, what they have told, 234A is for delay in filing the returns. So delay in filing the returns, we will charge interest on what amount? Whatever amount I am yet to pay. Whatever amount I am yet to pay. For example, guys, assume my final tax liability is 10 lakh. I have already did my TDS TCS is around 6 lakh, and I have a credit assume 1 lakh. What is the amount I am yet to pay? 3 lakh. There is a delay in filing the returns. So there is a delay in payment of tax also. Interest will be charged at 1% on 3 lakh, not on 10 lakh. Whatever I am yet to pay, interest will be charged only on that. How much, sir? 1% per month or part of the month. Even if it is 10 days, 5 days in a month, full month you have to take it. Oh. So 234A interest is when failure to file return of income before the due date, or else you are not at all filed the returns till now. Okay. What is the interest rate? 1% per month or part of the month. Period is from the due date to date of filing the returns. Sir, I am not at all furnished the return. Then due date to date of completion of assessment. Now, who will complete the assessment? Assessing officer will come and do it for you because you are not at all done. So till the date they do, interest will be keep on running. Okay. Interest is on what? Interest has to be calculated on the amount of tax on total income as reduced by an amount of advance tax if paid. Any TDS, TCS, any relief under section 90 or 90A, relief under section 89 or any tax credits. Any tax credits. Is that clear? So in simple, I showed the calculation here. Na? On 3 lakh, whatever tax you are yet to pay as what? SAT. Before filing the returns, on that interest would be charged under section 234A, guys. So what you guys, when you're studying, study 234A, B, C, try to study together. Okay, because you already know all these three sections together, try to study it because rate is same under every section. But when it will be levied is different. Yeah, yes. So please be careful. B and C is advance tax. A is for delay in filing the returns. And for delay in filing the returns, sir, is there anything else also charged? Yes, late fee. Fee. F for fees. Okay. How much, sir? 5,000. But if the total income is up to 5 lakh under any scheme, the late fee would be only 1,000. If total income is more than 5 lakh, then it is 5,000. 5 lakh, more than 5 lakh, 5,000, less than 5 lakh, 1,000. Yes, sir. Less than or equal to up to 5 lakh, 1,000, more than 5 lakh, 5,000. Is that clear? Yes, sir. So this is all about the provisions of assessment procedure, guys. There are some more provisions with respect to PAN, Aadhaar and all. So just you guys have a look into it, okay, because it is simple provision, but it is a part of your syllabus. Just go through it once. Clear? So this is all about this chapter, guys.